March 2024. In a quiet office in Beijing, a decision was made. A decision that would shake the foundations of global finance. China sold $688 billion worth of US Treasury bonds. Not over years, not gradually, fast, aggressive, deliberate. Here's what makes this terrifying. They did it at a loss. Think about that. The world's second-largest economy voluntarily lost billions of dollars to get out of American debt. You don't light money on fire unless you're running from something worse. So what did China see that we didn't? And what happens when the biggest buyer of U.S. debt becomes a seller? This is the story of the great unraveling, and you're living through it right now. To understand why this matters, we need to go back 50 years. Nixon opens China. 1978, Deng Xiaoping launches economic reforms. For decades, China and America made a deal. China would manufacture everything. America would buy everything. But there was a problem. China ended up with mountains of US dollars, trillions of them. So what do you do with trillions of dollars you can't spend at home? You lend it back to America. You buy US Treasury bonds. It's like this. Imagine you own a restaurant. Your best customer eats there every day, but always pays on credit. Over time, you're holding millions in IOUs from this one customer. You can't exactly kick them out. They're your entire business model. This was the US-China financial marriage. Codependent, profitable, stable. Until it wasn't. By 2013, China held over $1.3 trillion in US debt. They were America's banker. But something changed. Something broke. And between 2013 and 2024, China dumped over $688 billion. The question isn't just why, it's why now and why so fast. Let's talk about how this machine actually works. US Treasury bonds are the safest investment on Earth, or they're supposed to be. When you buy a US Treasury bond, you're lending money to the American government. They promise to pay you back with interest. Guaranteed. For decades, this was free money. China bought trillions in bonds. America got cheap loans to fund everything from highways to wars. China got a safe place to park their dollars and earn steady returns. But here's where it gets interesting. These bonds have a problem. They're denominated in US dollars, which means their value depends entirely on one thing: whether the dollar stays strong. If the dollar crashes, those bonds become worthless. And China started noticing cracks. First crack. America started printing money like never before. 2008 financial crisis? Print trillions. COVID pandemic? Print more trillions. Every time America prints money, the dollar loses value. And China's $1.3 trillion in bonds loses value too. Second crack, inflation. When inflation rises, the real value of those bonds collapses. You might get your money back, but it buys half as much. Third crack, weaponization. Russia invades Ukraine in 2022. America freezes $300 billion in Russian foreign reserves. Just like that. Gone. Seized. China watched this and thought, we hold over $1 trillion in US assets. What if they do that to us? Fourth crack, Taiwan. China knows a confrontation is coming. Maybe not today, maybe not tomorrow, but it's coming. And when it does, America will freeze Chinese assets instantly. So China faces a choice. Hold on to US debt and risk losing everything? Or sell now, take the loss, and get out before the trap closes. They chose option 2. But there's a twist. When you sell $688 billion in bonds, you can't just quietly slip out the back door. Someone has to buy them. And if buyers disappear, bond prices crash, which means you sell at a loss. China accepted this. They were willing to lose billions just to escape. That's not financial strategy, that's survival instinct. The dumping started quietly in 2013. A few billion here, a few billion there.
But by 2022, it accelerated. China wasn't just reducing exposure, they were running. In 2023 alone, China sold over $100 billion in US Treasuries. Japan, America's other major creditor, started selling too. Together, they dumped nearly $200 billion in a single year. Wall Street noticed, but the mainstream media barely covered it, because if people understood what was happening, panic would follow. Here's what's actually going on behind the scenes. China is building an alternative system. They're stockpiling gold, thousands of tons of it. They're creating currency swap agreements with Russia, Brazil, Saudi Arabia, bypassing the dollar entirely. They're launching the digital yuan to compete with dollar dominance. And they're funding the Belt and Road Initiative, creating a parallel economic infrastructure across Asia, Africa, and Europe. This isn't just about selling bonds. This is about building a post-dollar world. But here's the crisis within the crisis. If China dumps too fast, they crash the bond market, which crashes the dollar, which crashes their remaining holdings. It's like trying to escape a burning building while carrying gasoline. Move too fast, everything explodes. Move too slow, you burn. So China is executing a controlled demolition, selling just enough to reduce exposure without triggering total collapse. But there's a limit, and they're approaching it. Because on the other side, America has a problem. The US government runs a $2 trillion deficit every year. They need someone to buy those bonds to fund the deficit. For decades, China and Japan bought them automatically.
Not anymore. So who's buying now? The Federal Reserve, America's own central bank. Which means America is buying its own debt, printing money to fund itself. This is the definition of a debt spiral. And China sees it. They're getting out before the collapse. The real turning point came in 2023. China's holdings dropped below $800 billion for the first time in 14 years. That same year, BRICS nations announced plans for a common currency. That same year, Saudi Arabia started accepting yuan for oil sales. These aren't coincidences. This is coordination. The world is splitting into two financial systems, the dollar system and everything else. And China just picked a side. So, what happens next? First consequence, interest rates. When demand for U.S. bonds falls, America has to offer higher interest rates to attract buyers. Higher rates mean higher borrowing costs for everything. Mortgages, car loans, business loans. The entire economy slows down. Second consequence, the dollar weakens. As China and others dump dollar assets, the dollar loses value. Your savings lose purchasing power. Imports become more expensive. Inflation stays high. Third consequence, America loses leverage. For decades, dollar dominance was America's superpower. They could sanction any country and cripple their economy. But if countries stop using dollars, sanctions become worthless. America's geopolitical power fades. Fourth consequence, debt crisis. America's national debt is $35 trillion and growing. Without foreign buyers, the only option is printing more money, which causes more inflation, which drives more countries away from the dollar. It's a vicious cycle with no easy exit. Fifth consequence, global instability. The post-World War II order was built on dollar dominance. If that collapses, everything built on top of it collapses too. Trade agreements, military alliances, international institutions. We're not talking about a recession, we're talking about a restructuring of the entire global system. Now, here's what nobody's saying publicly. This might have already passed the point of no return. Even if China stopped selling today, the damage is done. Other countries are watching. They're thinking, if China's getting out, maybe we should too. It's a bank run, but instead of depositors rushing to withdraw cash, it's countries rushing to exit the dollar system. And just like a bank run, the first ones out survive, the last ones get crushed. So, where does this leave you? If you hold dollars, your purchasing power is eroding. If you hold stocks, they're priced in a weakening currency.
If you hold bonds, you're holding the exact asset China is dumping. The smart money is already moving into gold, into real assets, into alternative currencies, because they understand something most people don't. This isn't a temporary problem. This is structural collapse in slow motion. China didn't dump $688 billion because they hate America. They dumped it because the math stopped working. And when the math stops working, emotion doesn't matter. Politics don't matter. Only survival matters. The American empire was built on the dollar's dominance, and China just voted no confidence. Here's the uncomfortable truth. Empires don't collapse overnight. They fade slowly, then suddenly. Rome didn't fall in a day. The British Empire didn't end with a single battle. Decline is gradual, until it's not. China's $688 billion fire sale is a signal, not of what might happen, but of what's already happening. The global financial order is shifting. The dollar's dominance is ending, and most people won't notice until it's too late. The question isn't whether this system will change. The question is what comes next. A multipolar currency world? A gold standard? Digital currencies controlled by governments? Nobody knows for certain. But one thing is clear. When the world's second-largest economy is willing to lose billions just to escape your currency, that currency is living on borrowed time. China made their move. The rest of the world is watching, and the clock is ticking. So here's my question for you. If China's getting out of US debt, should you be getting out of dollars? Drop your answer in the comments. Let's talk about it. And if this video changed how you see the global economy, hit subscribe, because this story isn't over. Not even close.